2021, along with a lot of growth stocks. The online learning platform launching a new consolidated service, Learn with Chegg, this week, and today closes its nearly $500 million acquisition of language learning company Busuu. Joining us now, Chegg co-chairman, president, and CEO Dan Rosenzweig. Dan, good to see you. Start us off on Learn with Chegg, because you're bringing a bunch of the things that you do together. It's a bit of a different model and approach to your end customer. How does this change things?
Well, first of all, thanks, John, and Happy New Year to all of you. It changes things a lot, because what Chegg has been doing since the beginning is we're trying to build a giant platform to help people who need to learn things get unstuck, learn them, master the subject, and then perform better, whether it's academically or professionally now with skills or now with language with Busuu. And so the ability to create a platform that personalizes each student's needs based on whether or not what subjects the students are taking, what school they're in, what professors they have, where they are in the semester, how well they learn, whether they learn through video or through text, using machine learning, AI, and all of the data that we have of tens and tens and tens of millions of students over the years allows us to personalize the journey so that the student can now go from having to guess what to ask or try to understand what they need to know to us being able to present to them what they need to know now and what's likely to be coming next. So we're going to be with them on the journey earlier, longer, and create more value for them. And we think this is the next logical step of education. We're surprised that education itself hasn't really understood the value of personalized learning. They are starting to between K through 12. But in higher education and in professional, people really need to zero in on what they need to learn. They need to be faster, more efficient, less expensive, on demand. And that is what the Chegg new personalized learning platform does.
Now, Chegg has gone from being sort of a tool for renting other people's resources to a provider of digital tools for learning. And you seem to be moving into being a platform where learning takes place overall, moving deeper into actually being sort of a classroom yourselves. How deep are you going to go into that?
Well, that's very astute perception, John, because what we've come from understanding students better than anybody. Look, we reach more students on a global basis than anybody, particularly in the United States. We're growing very significantly outside the United States. And what we know is that more and more students need more and more help. And so they are looking to affect their lives in a positive way by mastering subject or learning it. And most students, if it's not for money that they quit, the other reason that they quit is because they get stuck and there's nobody there to help them. So we have to go deeper and deeper and deeper into all the information that they need to learn. We need to go back to the basics. We need to help them with job skills. Now we need to help them with language. It may surprise people to know that 40% of our students say they want or need to learn language in order to be successful in the next chapter of their lives, which means Busuu becomes a very excellent acquisition where we can extend into the United States more rapidly than most people could through the personalization platform. So we are going to keep going deeper and deeper. You're right. We started out as a third-party provider and invented textbook rental. We knew that print was not going to be around. So we started to build over the last 12 years a very large, popular platform for learning and mastering the subject.
Hey, Dan, it's Carl. It's good to see you. There's a piece in the Washington Post this morning about enrollment trends in colleges, losing 500,000 students this fall. And one of the experts says the longer this continues, the more it starts to build its own momentum as a cultural shift and not just a short-term effect of the pandemic. They look at their friends who didn't go to college. They seem to be making good money, as you point out. I mean, what is the risk that we don't get some of this back?
Well, look, from the Chegg perspective, our expansion outside the United States and our expansion outside of just academic support by going into skills, into language, is all because we've understood that those demographic changes were going to happen anyway. And we think the market is much bigger. I mean, language itself is like a $17 billion market and has more people learning language than people going to college in the United States. So we've always anticipated that was going to happen. But Carl, what we believe is happening is not that people aren't learning, they're just not going to the traditional places to learn. because they recognize they're too expensive. They take too long. They're not designed for the modern student. The modern student is 25 years old, has a job, 26% of them have kids, need for the learning to be less expensive, on demand, come with more support. So Chegg's platform expands beyond just the traditional marketplace into online learning, into skills-based learning, into non-traditional pathways. I do believe there's a natural momentum that's going to hurt a lot of schools that really don't prepare people for the job marketplace. And that has been something we've been talking about for over 10 years. So Chegg is in a position to take advantage of the trend that's happening, but many people aren't.
Dan, it's Deirdre. I have a question sort of around this wild stock action you've seen over the last year. I wonder if you wish that you had done more perhaps when your stock was trading above $100. I know that you did raise capital in February of 2021, but do you wish you raised more or used your stock as currency to do more or bigger M&A, sort of like we saw Tesla and some of the meme stocks do at the height of their stock journeys?
Yeah, no, it's a fair question, but we have a philosophy which is you never know the road not taken, so you might as well just make the rage around successful. We're very happy. Look, we have over $2 billion in cash still, even after we did a $434 million acquisition of a company that is growing faster than we are, by the way, and will extend our presence in Europe that we can bring to the U.S. And we were able to do that with money that we did raise at $100 a share. And so that made it very efficient to buy it. So we're very good stewards of capital. And we're also buying back $300 million worth of our own stock, and we still have $2 billion. So we're the best financially positioned company in the education space. So, I mean, we can't go back and revisit what might have happened. We certainly did not anticipate what happened in the fall to happen. That surprised everybody because the pandemic extended, and beyond that, people were making so much money that, as Carl pointed out earlier, they chose to go make money rather than go back to school. Some of those things were unknowable. So we're very happy with the position we're in, and we're utilizing our cash position as a leader should.
Well, with what we see happening to the global economy and the labor market, Edtech, as you know, is a subject near and dear to my heart. So hope to talk to you again soon. Dan Rosenzweig from Chegg.
Anytime. Thank you, guys. Happy New Year.
Thanks to Dan. Don't forget to follow and subscribe to our podcast to listen anytime, anywhere, wherever you download podcasts. Tech Check is back in just a moment.